Good evening, students. Welcome to part 2 of the manufacturing account. Last week, we dealt with the manufacturing account and the different types of costs involved in the calculation of the production of cost of goods completed. We said that the manufacturing account has to do with the creation of goods. Not in all cases, people just buy goods and sell. There are times when businesses do make their own products and sell them. This account that they have to prepare is called the manufacturing account. We looked at some examples of manufacturing companies such as Juicy Beef, Grace Kennedy, and Lasco. Different types of costs that we looked at in previous lesson were direct costs, indirect costs, and production costs. And of course, examples of direct costs include material, labor, other direct expenses, and indirect cost refers to those costs that cannot be easily traced to the production of the item, such as wages of cleaners. Then the production cost is the final cost you get on the manufacturing account. So for today's lesson, the objectives are as follows. By the end of the lesson, you should be able to explain the terms finished goods, administrative costs, selling and distribution, and financial charges. Calculate the cost of finished goods sold, gross profit, expenses, and net profit. Now, this lesson will be dealing with the trading and profit and loss account. I'm sure you can remember this account from introductory aspect, right? The trading profit and loss account has two parts, namely the trading account and the profit and loss account. The purpose of the trading account is to calculate the gross profit or loss, and the purpose of the profit and loss is to calculate the net profit or loss. Now, there are some key terms that we need to know before we move on. In previous lesson, we learned of three types of inventory. Inventory of raw material, work in progress, and finished goods. Now, raw material and work in progress were both dealt with in the manufacturing account. Finished goods are dealt with in the trading account. These represents stocks that are complete and ready to be sold to the consumers. Then we have finished goods at the beginning. Yes, you may have finished goods at the beginning, and we may have finished goods at the end. So you may start out with some, and at the end of the day, you may not have sold everything, so we still have some in stock. An example of a finished product is a cake or a dress. Key terms, continuing key terms, production cost. We dealt with this in the manufacturing account. This figure is transferred from the manufacturing account and is added to the opening inventory of finished goods. This is usually written in place of purchases but not replacing purchases, because there are times when the goods manufactured is inadequate, so companies may have to purchase additional stocks in order to meet the demands of their orders. So, this production cost of goods completed is added to the opening stock of finished goods in the trading account. Another type of expense we're going to be looking at now is the administrative expenses. All expenses that are related to the general functions of the office, example, stationery, salary, and insurance. We also have selling and distribution expenses that are related to the selling and the delivery of goods to consumers. Example, delivery expenses. Remember when we looked at the manufacturing account, the types of expenses that we looked at in the manufacturing account had to do with the factory overheads. So in the trading and profit and loss, in the profit and loss account, these expenses are your administrative, your selling and distribution, and your financial charges. Financial charges are expenses related to the accounting aspect. Example, of course, your carriage outwards and your delivery expenses. Now let us look at a question. Now, we would have completed a manufacturing account from previous class and we would have calculated the production cost of 18320. Now this is the additional information that we are going to use in order to construct our trading and profit and loss account. Take for example your sales and your different opening and closing inventory and your expenses. So all of that we are going to use. Now let us look at the solution that is given. Every account must have its title. And of course, T. Hawkins Trading and Profit and Loss Account for year ending 31st December 2017. So we start with our sales and we place it in the third column. If you notice, we have 3 small columns, 1 big column. The first small column is used for the working out adjustments, and the second column for the subtotals, and the third for the final. Now, from sales, we less our cost of finished goods sold. And of course, it is a process. It involves your opening stock of finished goods, purchase of finished goods, and production cost, which comes from your manufacturing. Add these 3 figures to get a cost of finished goods available for sale. Please pay attention and go to as slowly as possible. We're going to less the closing inventory, and then now we get our cost of finished goods sold. So all of this process coming down gives you your cost of finished goods sold. This is then subtracted from your sales to get your gross profit. And of course, all these 3 categories of expenses, we place the different types of expenses based on their categories. So for administrative, we have insurance and administrative expenses. Add them here, put the total in the second. We have the selling and distribution, add them in the first, put the total in the second. Same thing for financial charges. When we add all these expenses now, we're going to subtract it from the gross profit. Now, once it is your expenses, they are less than the gross profit, we are going to end up with a net profit. So when we take the expenses from the gross profit, we end up with a net profit of 15,680. So bear in mind the process. This is a classified trading profit and loss. All the categories are shown with the different items under each headings. Be careful when you're writing up the accounts here to ensure that everything is done properly. Now, for your assignment, from your textbook, your Principles of Accounts for the Caribbean, written by Frank Wood and Sheila Robinson, you're going to complete exercise 37.6x on page 372 of the 6th edition, and on page 424 it is 36.6x in the 5th edition. Remember, complete and upload to Schoology. I'm expecting your responses by Wednesday at 12 noon. Good luck, students, and all the best.